Well, welcome along to the final instalment of Buy-to-Let Blueprint Week, powered by Nova Financial. All this week, I've had the pleasure of the company of founder and MD Paul Mahoney, and we've covered a lot of ground this week, actually, Paul. I've really enjoyed talking to you, but I think for the final instalment, we were going to focus on three things that are absolutely vital for landlords, prospective landlords to understand, and they're kind of core topics that come up time and time again on Property Tribes, and that is tax, finance and managing the asset. Obviously, if we start with tax, the tax landscape has changed so dramatically in the last 4 to 5 years since the introduction of Section 24, and landlords coming into the sector now, they really need to make a choice about whether they're going to go forward as a sole trader in buying property in their own name, or whether they're going to be incorporating and buying through a limited company. And it's not a question of one size fits all, and there's no easy answer, is there? No,
there's definitely not. Again, we spoke before about the blueprint being personal, to that individual, and that's paramount here when it comes to tax structuring. I think a lot of people, with anything with relation to tax, it's quite confusing. But especially Section 24, the way it's written is very confusing, and a lot of people don't really know whether it's going to affect them or not. And that's probably resulted in a lot of people not really knowing what to do from here on in, whether they should continue in property investment, whether they should incorporate, all those sorts of things. But obviously very important for any landlord or prospective landlord to understand how that's going to affect them and their strategy moving forward. So I think anyone that is involved is absolutely mad not to seek advice on how that's going to affect them or how they might be able to avoid the effects of it, because there are some ways around it.
No, I totally agree. It is one of those cases where professional advice is worth every penny, because it's also thinking about when you come to exit, maybe you're going to go for a legacy model that you want to leave to your children. Yeah. You kind of, again, you've got to start at the end and kind of work back as well, haven't you?
Yeah, you do, because it's somewhat difficult to unscramble the egg. Certainly with existing portfolio's, obviously you can change the way you do things moving forward. But once you own a property in your own name or in a limited company or through whatever other millions of structures that are out there now, it's difficult to change it. So you need to make sure that you're getting the right advice on how to structure that moving forward, particular to your situation, your timeframes and your end goals.
Yeah, no, I think it's absolutely paramount. If we talk a little bit now about finance. Again, a lot of changes to the mortgage sector in recent years. We've had the introduction of the PRA, which is actually, healthy in my opinion, so that people aren't getting over leveraged. But again, I think there's so many mortgage products out there now. A broker, certainly when I was in my portfolio building phase, I had my broker Rebecca on speed dial. She was such an important asset to me. She helped me stack deals. She helped me find the best product. It's not necessarily just about the headline interest rate, is it?
No, absolutely not. And I think the biggest mistake that beginners in property investment generally make, and we hear this time and time again, is they go down and speak to the local bank or their current bank, their consumer bank. And, you might go down and speak to Lloyd's and they'll tell you, no, sorry, you can't get a buy-to-let mortgage or you can only get it at this really high rate or whatever it might be. And then they assume that, well, that means I can't get a buy-to-let mortgage. And that's generally not the case. As you know, there's a very broad range of lenders out there. There's some lenders that will almost lend to anyone, but at very high rates. And then there's the high street that are quite stringent and strict in who they'll lend to. And then everything in between, including, specialist lenders for different things. So there's over 1,000 buy-to-let products available now. And more than half of those are only available through brokers. So firstly, by doing it yourself, you cut yourself off to half the market. But also, it's kind of like anything. You don't... When you can't drive a car, you don't just jump in the car and start driving it. You get some lessons and some guidance on how to do it. So you're going to save yourself a lot of time and money by speaking to someone who actually knows what they're doing. And in that area, it's not just about speaking to any broker either, because some people that we speak to are surprised to hear this, but most brokers just do residential. because that's, mostly what they do. They speak with people that are buying homes. But if they're not, familiar and doing lots of buy-to-let mortgages, well, they're not going to be familiar with the buy-to-let lenders and the products that are available. So speak with a specialist to what you're actually looking to do or get.
No, I totally agree. When Nick and I started out, I'd been banking with NatWest for many, many years. I initially went to them and took an equity release from my flat in London. That was what we used as a kind of seed our portfolio. But then when I started immersing myself in the sector, I came across all these different names like Aldermore and Precise and Together, and just so many different lenders out there that, you just don't hear about, but they've got really specialist products that can help people move forwards.
Yeah, absolutely. And it's a broker that helps you find those things out, because of course you can do it yourself, but why would you, and again, another thing to consider with brokers, I'd say, is don't just seek out the cheapest ones. Some brokers won't charge any fees, but I'd say that's more so the kind of sausage factory type brokers, the really big offices that you're probably dealing with someone that's got not very much experience, and they're quite often chasing the higher commissions as well, because the commissions do vary quite a lot between lenders. Whereas, if you have to pay £1,000 to get a £500,000 mortgage, and that's done in the best way possible for you, that could save you tens of thousands of pounds over years, I'd say that's probably not a bad option.
Money well spent, I think. I think also, we're talking about standard buy-to-let mortgages, which is, of course, the bread and butter of buy-to-let financing. But then you've got other financial products like bridging loans, and you've got specialist mortgages and mortgages that help you to do a refurb. And again, if you're not aware of these products and how they actually work, it's harder to move forwards. And I actually met a very, very experienced property investor a few weeks ago, and he said, I came across this fantastic product. I could see how it worked and how brilliant it was. He said, I went and found a property that suited that product, which I thought was quite an interesting way to kind of approach it.
Yeah, that is quite an interesting way of approaching it. But absolutely, there's lots of specialist lenders and specialist products out there now. So you need to make sure you're using a product that's fit for purpose.
Yeah. Because it's like a tool in your toolbox, and you want to have access to as many tools as possible, really, to help you move forward, don't you? Yeah,
exactly. And we spoke before about the massive difference that finance makes to property and the returns on the funds that you're applying. So, if this is a long-term strategy, you're looking to build a portfolio, making sure you're using the right product and the right level of leverage and the right interest rates and all those types of things every time is going to make a huge difference over the mid to long term.
No, I totally agree. I think one of those questions that comes up time again on Property Tribes is, should I go for an interest-only mortgage or a capital repayment mortgage when I'm starting out in buy-to-let? And, it's a good question to keep asking. And clearly, you would go for interest-only. Could you just explain why?
I would. And I'd say, similar to some of my views, it's a kind of against conventional thinking a little bit, in that a lot of people view principal and interest as being lower risk because you're paying down the mortgage. And in a way that makes sense. But if you look at it the other way around, actually by going for your principal and interest mortgage, you're committing yourself to a higher repayment amount. So, you're not just paying the interest, you're paying some off the mortgage every month as well. Which means if you run into some financial difficulties, you've got a higher liability to upkeep. Whereas with most interest-only mortgages now, you can repay extra over and above the interest if you want to.
Yeah, I think it's usually up to about 10% per annum.
Yeah, exactly right. Which means you can get the same benefit without the commitment. So I'd say with buy-to-let, always go for interest-only, but pay extra if you have the ability to do so.
Oh, that's such a good point. Thank you for raising that. I think the other thing is we've always been talking all this week about how it's not a case of one size fits all. And with different products, you've got your 2-year fixed, you've got your 5-year fixed. Even now we're seeing 10-year fixes coming out, which is really interesting. But again, if you understand your investment and what your long-term goals are, and you work with a broker, you can actually use these products correctly in the way that's going to serve you.
Yeah, absolutely. And it needs to fit your strategy. I'd say most of our clients they aim to be able to remortgage every 2 or 3 years. And most buy-to-let products almost force you into that, because you'll have your initial periods of 2 to 3 years where your rate is a bit lower and then it will increase. So in my view, it's a good indicator or a good sort of reminder to say, okay, well, have I built enough equity in this property to allow me to release some equity and go again, or across a couple of properties perhaps. Whereas if you lock yourself in for 5 years or 10 years, you're going to pay very high fees to be able to get out of that and get any equity or funds out of the property. So, if your strategy is to build a portfolio, then a 2 or 3 year product probably works quite well.
I think also, mortgage products, they're so important in the respect that, we were talking earlier about, getting started. Right now, we've got the most competitive rates we've had, in many years. If that isn't a reason to take advantage of those rates and get started now and take action, I don't know what is, because they may not be around for longer. I think, it's seeing where the opportunity is and taking advantage and as we've been saying, taking action.
Yeah, absolutely. And making sure that you're best utilising your funds, as we mentioned before, because leverage, in my view, is what makes property so attractive. Cash bought property isn't all that great from a net returns perspective, but it's the leverage that makes it great. And that's, I think far too many people look at debt in one pool, and I speak to people about separating that to good debt and bad debt. Good debt is investment debt. It helps you better utilise your funds. Bad debt is personal debt. It hurts your finances. It helps your lifestyle. So you want to retain good debt until you have no bad debt, and then maybe you can start to get rid of some of your investment debt as well if you're in a good enough financial position to do so. But if you've got cash bought properties and you're not extremely wealthy, I think you're completely underutilising your resources. Because, if you can borrow at 2 or 3% and achieve returns far greater than that, then why wouldn't you?
Yeah. Well, again, it goes down to the maths, doesn't it? It's telling you the answer. The final point we were going to talk about is property management. We have talked about this in a previous video, but I think in the context of today's discussion, I think that once you've purchased an asset, you do have to keep it up. You have to keep it refurbished. You have to budget for a facelift maybe every 5 to 8 years if you've bought new build or if you've done a refurbishment. You can't just sit back and let an asset deteriorate, because it's like a downward spiral. You'll achieve less rent, you'll have higher voids. I think people have to have a plan to maintain the asset and to keep funds back to do that. Yeah,
absolutely. You need to make sure the property's upkept. You need to make sure it's managed well. You've probably gathered from the theme of what I've been saying that we tend to encourage our clients to be more passive in their approach, generally, if that's what suits them. But I'd say that is what suits most people. And therefore, we encourage them to have in place full lettings and management, so they don't necessarily need to get bogged down in doing that themselves. Some people like doing it themselves, and if that's the case, great. But obviously, you'd want to make sure the properties are relatively close by, if that's the case. If they're not close by, then again, I think you're mad to try to self-manage them, because if you can't get to them quickly, well, someone else can. And the cost of doing that is, in my opinion, relatively acceptable.
I agree.
If you can get someone to let and manage your property for 8 to 10% of your rent, well, that's a relatively small fraction of, especially when you consider the time value, your own time value, and the time that you're personally going to put into that.
And I think also the important thing about property management, working with a reputable agent who, as we've mentioned, is either voluntarily committed to professional standards by joining a trade body such as ALA or Safe Agent or RICS, are the three main ones. By working with somebody of those credentials, they are going to help you maintain your asset, but also make sure you're compliant, because lack of compliance can lead to massive fines.
Yeah, absolutely, and complications with tenants, and if they stop paying and you haven't fulfilled your requirements, then that can get you into a lot of trouble as well. But there's also another good point there with property management. There's economies of scale in property management with like anything, and if you're dealing with a good agent that's managing 50 local properties, well, they're going to be able to do that better or more cheaply than you can if you're just managing 1 or 2. So that's worth considering as well.
No, I totally agree, and I am a big fan of lettings agents. I think they fulfil a very important role, particularly for newcomers. I would certainly never advocate somebody starting out and managing their own property. Work with a reputable agent first, understand how much work is involved, how much time it takes. Setting up the tenancy compliantly is so important, because at the end of the day, Paul, we are responsible for tenants' safety and health in the property, and that should really be at the forefront of people's minds as well. And this is where a reputable property manager can really make sure that you are providing a safe and compliant home.
I agree, and it kind of ties into what we were saying before as well. Yes, a lot of people we speak with say they want to buy close to home so they can self-manage, and I think that's a bad reason to buy close to home, because for example, if you live in London and you can get double the yield in Manchester, and it's going to cost you 10% of that doubled yield, well, the cost of the management is a lot less than the benefit of investing in that area, if that makes sense. So, sometimes investing close to home can be a good idea because you just so happen to live in an area that's a good place to invest. But quite often that's not the case, because you've used an emotional criteria to select where you live versus a commercial criteria to select where you invest.
And I think, as we've been saying, if you get the right people around you, it can be done remotely. I've just had a 4-bed house in Manchester that I haven't visited for a long time, actually. Had a complete refurb done of that, which was managed by the agent, and they did a fantastic job. I got all the pictures at the end to see the work that had been done. So yes, I think certainly starting out, really, really important to have a reputable manager, and we will put a little link below this video to show you how to do due diligence on a letting agent, to make sure you find yourself towards one. We do have a few people on Property Tribes that have had bad experiences of working with agents, and I can only assume that they didn't do the due diligence.
Yeah, absolutely. That makes a lot of sense.
Yeah. So we're winding up here our Buy-to-Let Blueprint Week, where we've been talking about many different aspects of starting out in property, building your portfolio. And Paul, I guess to finish, it would be nice just to find out from you again, if people who've watched our series this week would like to interact a little bit with you, what can they do?
Yeah, okay, so there's quite a lot they can do. We now have over 100 hours of video on our website. Yep. So they can there's a lot to sink your teeth into there from an educational perspective, yep. Blogs and articles and things on there as well. So far as if people have any questions or think they might be able to improve on their current strategy, any unknowns so far as how the current market might affect what they've been doing up until now, perhaps not quite understanding what their goals and their timeframes are, and then also, of course, implementing that and making positive change to their situation. These are all things that we can help with quite a lot. So getting in touch for an initial chat to sort of find those gaps, yep. And then determine whether there's a fit between what we do and what they're looking for. That can be quite beneficial, at the very least, to find out what their options are. We've never had a client disappointed with that initial conversation. But if there is a fit there, then of course actually helping them make that positive change.
Yeah, because you have a very holistic approach. You look at all of the issues that we've actually been discussing this week, don't
Absolutely.
you? So you could plug the gaps if there's a knowledge gap, or you can review portfolios, you can see how people you can help them move forwards, really.
Yeah, great. And of course the book's a good starting point on that as well. So anything that we've been talking about today, that kind of expands on that, mm-hmm. But we'll also tell the reader a lot more about what we do, so they can decide whether that fits their train of thought and what they're comfortable with, mm-hmm. And then perhaps get in touch from there.
Fantastic. Well, we'll put a link to Paul's book below the video. You can apply to get it for just the cost of the postage, so I highly recommended to do that. And we'll also put the contact details for Nova Financial below the video. And Paul, I have to say thank you very much to you and Nova for powering this week on Property Tribes, and supporting landlord education via this format, because I know it's very important to you, isn't it?
Yeah, absolutely. And thank you very much for having me.
It's been an awesome week. We hope you've enjoyed it. If you've been watching on YouTube, we do invite you to click across to propertytribes.com. That is where our discussions are hosted, and Paul is also a member of our community. So if you have any questions for Paul, I'm sure he'd be absolutely delighted to answer them. But for now, we're signing off from London here at Nova Financial offices. We've reached the end of Buy-to-Let Blueprint Week, powered by Nova. And again, we do hope you've enjoyed it, and thank you very much for watching.